It's 8:30. There must be some mild news out or something.
Yeah, there's news out and Draghi's speaking as well, so the
Yeah.
euro about to
Okay.
fall.
Well, okay. I'll hold off on this for a second.
He usually manages to talk the euro down.
Yeah, I hear you.
It's not an exact science, of course. Nothing is.
But I see this entry. It's decent. Let me talk the whole day through first. Yeah. So if you remember last session, let me get rid of this. I don't want the crosshair. Okay. Last session, we marked out this area right here is where I felt this pullback would pop into and then give us a reversal. Now, it didn't reach that area yet, all right, but it did give us overnight a decent drop, possibly to start this next leg down. If I measure this pullback here was about 200 pips. This run down was about 180, so that kind of falls in line. I would still expect it, 180 to 200. Let me just be sure about that. Yeah, 230 to 180. It's about a 50 pip difference in the two runs, which is not unusual to have two pullbacks, vary a little bit. As you said, it's not an exact science. So I want to be a little cautious today because I, still expect this to come up into this area. This looks like it's going to come down where we want it for a decent entry. Um, Come on up. Oh, they really can't make up their mind this morning. Okay, I'll take it there because we got back near that low. We'll see what happens. Um, so I would still like to see it pop up in this area, but these two pullbacks are close enough that this one candle could have been equivalent to those two. You follow me? So my bias is a cautious short. And let me open up the data thingy here so we can see where we are. This uh, line here, this pink line, I believe is from the 1 minute chart. I was looking at, well, where would I need to see price really get below, and I was targeting in here somewhere before I take a trade. But this looks like it could produce something since that first blast of news never really came back up significantly.
I think they're holding off, Lou, aren't they? Because it's beige book later, isn't it?
Yeah, yeah, and we have non-farms later in the week. So on a cautious day like today, it may take two or three trades to get the $50 because if the market doesn't have a very clear direction, it could really be an interesting morning waiting for prices to settle down. Um, but my bias again is cautious short. So what I want to be very clear about when I do take a short is that on the 5 minute, I'm below the 89 and the 18. And on the 1 minute, I want to be below the 89 and the 18. All right. So I want to make sure both of those are in line. I'll open up my close order button and let this dance around a little bit. Let's see what this next candle gives us. We got a little bit of profit. Well, it's got to make the upper wick now. I'm on the 1 minute chart, so it's got to make the top wick and then come back. So we'll see. But this is the kind of day when the daily is not giving me really a like the kind of clear signal that I like to see. So I may take several little bites out of the market. But this is the daily chart here, obviously. We had this drop down. Yesterday's bias was long because we hadn't had a significant pullback, and I wanted the pullback to reach up in this area. It didn't, but these two pullbacks on a daily chart are close enough where this could be considered a full pullback, even though it did it in one candle here and took two candles there. So that's kind of what we're looking at. And I need to be a little cautious here because these things are jumping around so quick that even if it gets down to like 2.5, 3, 4 pips, by the time I click out of it, bam, thank you, ma'am. That's the 5 pips for the day. It's not quite $50, but again, my goal is to get the 5 pips. You follow me? Because that's the consistent part.
Yep.
Everybody follow me on that?
Yep.
So I owe myself $16 now to get to the $50. So let's go back here. So again, we did what we said. We saw what the problem was earlier in the week with taking trades. And, you see the entry, you take the entry. You see your 5, you take your 5. So we've accomplished that. So now I'll go back out to the 5-minute. And now, had this been a full lot, I'm done for the day. Okay? On that account. Now, I may go to another account and continue trading, but if I have an account like I'm planning a trip, or if I want to buy gifts or something for my daughter's birthdays or whatever, on that account, once I get that number, I'm done. I don't mess with that because I know where that money's going. And again, I'm not saying you should adopt that thinking because that's my thinking, but adopt the thinking pattern that works for you. All right. Okay, so we need $16 basically to get to our $50, but there's nothing happening here. I had another breakout kick in last night. Let me slide this over so you can see it. Again, $1 a pip, but this could be 6 in a row with these. And that's my target, but I may get out much earlier than that. Let me just see what this would give me anyway, or what the setup was. That's 50 pips. Okay, I'll take the 50. Don't get me wrong, but so like I'm kind of burning it at both ends. You see what I'm doing? I'm taking long-term trades, setting them up at night with the right setups, right conditions, and all that, and then I'm coming here in the morning and trading for pocket money. So you can, really get a little bit of both going for you. Now, the other situation here is that yesterday our daily range was 187, and that was because of this guy, right? Oh no, that was because of the news yesterday. Let's go back. And remember, we had these big run-ups. Okay. Let me make this full screen. Okay, so this is today, right? And then yesterday, where's Asia? Let me squeeze this in a little bit. So this was yesterday. Okay, that's your 187. And today we've done more of a normal looking 125. You follow me? Well, it says 121, but so, and now we're possibly double bottoming here. And I'm going to bring this yellow line down. I don't need this right now. Let me take this. I'll bring this down here, the pink one. And that's kind of our double bottom. We've had 1, 2, 3, 4, 5, 6, 7 attempts to close below this low, and it has not. You follow me? So this could be a 1, 2, 3 or a double bottom to go back to do what? Anyone remember? Okay, after a strong, significant run, and after we, lock in at our previous days. I hear someone trying to say something. Okay, now that's background noise. After a major significant run, I explained this the other day, but I'll go over it again. After a major significant run, prices tend to come back to the middle of the chart, meaning in this case, this run went from here to here, and I'm expecting prices to come back to the 50 level at some point. You see that? That's the 50 level. And if I roll forward, you see that's what happened from yesterday's move. We came and bounced right in and at that 50 level. Okay, so let me take this off the chart and let me come back here and I'll throw a fib on this here. And I would expect at some point in time, prices are going to come back to this 50 level. You see that? And we've got a possible a 1, 2, 3 right here, possible double bottom. So again, we've got a little bit of mixed signals with the with the pair right now. So anything I do, I'll be pretty cautious and make sure I'm double checking all the rules on both ends. Okay. Oh, so I'm going to take the fib off. Wait, let me mark the 50 level here. Let me put a little line here at 50 because I want to do the other thing I do with a 1, 2, 3. So that's my 50 level. We don't need this line. This trade is done. I'm going to take this off the fib. Delete. And I'm going to put the fib expansion on. And I'm going to put it on as a 1, 2, 3. And just see if it lines up at all. And it falls pretty much relatively close. Not a dead center, but this pocket wouldn't be a bad target right in here. You see that? That first fib level and this 50 level from the overnight move. But again, that remains to be seen. If we get a close below this low, then we could be looking at a couple more legs down. And a lot of that may be determined later today by the talking heads. So I have my game plan laid out. We did the 5 pips. We were consistent with that. For the $50 a day, we still owe ourselves a couple of bucks. Anyone have any thoughts or input, questions, or anything?
Do I have one if I may?
Yeah, go ahead.
You mentioned before there about a double bottom, but you've got lots of like wicks hitting the same area, haven't you?
Yes. Now, what happens is here's the key thing. The key price is this price right here, because it's the lowest close in this whole cluster of candles, and it's a closing price that the new cluster of candles hasn't been able to crack either. You see that? So in many cases, a lot of guys won't call this a double bottom unless this wick is down here. And that could happen on this candle or subsequent candles. But I prefer to look at the strongest price, the strongest area where price couldn't close. And that would be this price right here.
Yeah.
That to me is more important.
Yeah.
Because every trader in the world trading this pair sees we haven't cracked this level. Now, they may not be looking at that candle the way I am, but they're looking at this area saying, well, we don't have new lows. That's what the general talk would be.
Yeah.
So until I see that, if I'm trading my regular account, I wouldn't go in with a large position. You follow me?
Yeah.
I'd go in with a modest position and then let the market prove it, and then maybe I'd add a little bit, that kind of thing.
Yeah.
Which I'm looking forward to doing that also, so you can see the power in that.
Yeah, Lou, something I was taught way back more than 20 years ago, or somebody's opinion was that, when you get a candle or a wick hit a line like you've got there, I was told to think of it as a wall. So the first time it hits the wall, it bounces off. But the more time it hits the wall, then the wall tends to weaken. And at some point, that's going to go. It's like hitting a wall with a hammer. You hit it once, nothing happens. You hit it 6 or 8 times, something is going to happen.
Yeah. I agree with that completely.
Right.
Yeah, because there's no line on the chart that never gets penetrated or
Yeah.
rejected at some point.
Yeah.
There's no such thing as that in that impossible line.
Yeah.
So, and keep in mind what I call holding too. If you remember from the classes, you see we had three hits at this pivot point,
Uh-huh.
and then finally it closed above the pivot. But my test to see if the pivot holds is what happens on the next candle. The next candle came right back in line with everybody else, so the pivot held. So now, had this price made a candle, this green candle, but then made a short candle that tapped and made a wick right here and closed above the pivot, then I'd be
Yeah.
long.
Yeah.
But the key would be the retest would have to close above the pivot. And here, the very next candle tells me this pivot is holding. All right.
Yeah. Yeah.
So now, after this, now I'd be more inclined to take a short because we've now gotten below the slow. But let's see where this closes. And again, I'm being a bit cautious because the daily chart isn't, uh, wasn't giving me like the signals I like to see. The bias is still short, long term. You follow me? But there's enough stuff there where there could be some confusion. Now, I'm not going to call this a mistrade because I'm waiting to see how price reacts at that level down there. If we get a close below here, then I can start looking for another short. And
Yeah.
let me
That's
go. What
that's
was that,
enough.
Tone?
No, Mike. It's
Uh,
Mike, Louis.
I'm sorry. I'm sorry.
That's all right. That what you said before there's in line with something else I was taught where you said that the green candle closed above the pivot, but the second candle came right the way back down again. I was always taught if you've got a line, wait for another candle to be a confirming candle.
Correct. And how you confirm is a matter of what method or what candles you like, what patterns you're accustomed to.
Mm.
I just like to see if this really is a break, then the next candle is going to prove it.
Yeah.
Like you see here. Well, this line was from something else, but here we broke the line. Next candle came right back down in line with it.
Yeah.
You follow me?
Yeah. Because you
Same thing up here.
yeah,
Broke it. Okay, we're going long. Oh no, you're not.
exactly. That's why you need another candle to
Right.
confirm it. Yeah.
Yeah. So, and that's my specific take on it.
Yeah.
Um, when I'm trading, like I have another 4 hour system where I trade double zeros back and forward. And that's one of the things I look for at a double zero. Like I have all the double zeros lined up on the chart.
Hmm.
And that's what I look for. Let's go back here. Um, Let me see where am I on this other trade. Oh, Ron, I'm sorry. I didn't see your typing there, Ron. Forgive me. Lou, why are you setting your goal of 5 pips if you are trading with various lot sizes, one lot, a half lot? A pip is not a pip. The goal should be in USD rather. No, Ron. The goal should be to get a consistent number of pips every day. Okay, that's what I'm looking at. I want to get the same number of pips every day like clockwork. Then I can just add lot size because I know I've got a method that will be reliable and I know how much that reliable method will give me every day. Do you follow that, Ron? Our goal here was $50 a day. That was the primary thing because you personally prefer to count everything in dollars. And I get that. Everyone has their own way of doing it. But when the pips traded with point 0.5 lots are only worth half, yeah, Ron, I understand that. But and do you remember the reason why I cut down to a half a pip? You have to look at trading as a number of different factors. Okay, so can you briefly explain why I cut the lot size down? I just want to make sure that you understand it. I'll wait for you to type. Correct. We were in a drawdown, And more importantly, we didn't know why. That's the important part, Ron, because I didn't look at the why was I in a drawdown? Why did I have a couple of losing trades in a row, which I shouldn't say is a bad thing because the best system in the world could give you three, four, five trades in a row, negative trades in a row. All right, so we cut the lot size down because we're in a drawdown. Your number one goal as a trader is the same thing as in boxing. Protect yourself at all times. That's the first thing a boxing coach tells you. Protect yourself at all times. And the idea with trading is to protect your account at all times. So that means we may have to take 2 trades to get the $50 or 3 trades to get the $50. But the consistent part that I'm more concerned with, Ron, is just getting that 5 pips a day for this particular experiment we're doing. You follow me, Ron? Then we can go after the $50. Trading encompasses a lot of different parts of trading encompasses a lot more than just the candles. It's your money management. It's your mental management. It's protecting your account. It's growing the account in a safe, reliable way. It's knowing what to do when things go right and knowing what to do when things go wrong. And I'm trading this, doing all of these things, so at least you can see how one trader handles it. I'm not saying I'm the expert, okay, but once, I realized, okay, something's wrong. I found out what was wrong. I fixed it. And now I think we're 5 trades in a row or something like that. You follow me? Just by fixing what was wrong. And most, a lot of courses and stuff, what they teach for protecting your account is so piss poor. Let me take that back, because I don't want to knock another guy trying to teach, but I'll say that they miss some of the obvious stuff or some of the common sense stuff. You know what I'm saying? I'll give you a good example. I go out with a group of guys every few nights, and we stop at like a local pub or a local restaurant, and we eat. There's one particular guy that every time we get together, when the bill comes, he says, "Okay, everybody, let's all put the bill together." The only thing that is limited is trading capital. Setups will appear every day. Yes, Ron, you're correct. And I'm assuming everyone sees what Ron is typing, right? We don't have a trade set up here, so I can go off a bit. And and also remember what I mentioned about this. I'm not too quick on taking a trade short until I get a close below this level. You see that? And sure enough, we got another spike, but look where that spike ended, right back in the mix again. So this level, as far as I'm concerned, is holding. You see, so I had my game plan, no trades unless I close below this low. You follow me? Any questions on that? All right, that's how that's why I said today's a cautious day because the long-term signal is a little bit mixed. Now I want to go back to Ron's question, and you're right. Everyone sees what Ron is typing. Who is Moneymaker?
Sometimes it flashes up what he's typing.
I see someone. The attendee is Moneymaker. I don't know who that is.
Heard of it.
Moneymaker, can you tell us who you are? Not saying anything. It's funny when I go back and
It's
rent.
it's
He's got
Nancy.
Nancy in chat.
Oh, Nancy.
Yeah.
Okay. Well, welcome, Nancy. Okay. Thank you for that. Glad to see you here. What's interesting when I render the videos, I get like a box that tells me like the views and all that, and there are like people in 11 countries watching it, and there aren't 11 of us in here, and a lot more hits than the number of people here.
I don't know how they found the YouTube site then.
Yeah, so I know we've got stalkers, but go okay. So let me give you an example of a weird money management thing. So we all go out together and we'll eat. And then when the bill comes, the guy says, "All right, let's all put the bill together. We'll split it up equally." Now, I usually get screwed on this, and I brought it to a stop because I just didn't like the funny business of it. I don't drink when I go out. Once in a blue moon, I'll have a beer, but usually I'll have water with lemon. So last night I had a turkey burger with French fries. It was about $12, I think it was. And the same guy ordered like a big appetizer, a big meal, and ordered a soda and some other stuff. So when the bill came, he said, "Okay, everybody, we're going to, put the bill together." My $12 hamburger all of a sudden became 25 bucks because when you split the bill amongst everybody, and I don't drink, I didn't have, soft drinks. That's where they bang you out, $3 for a little glass of soda, and you can get like a damn near 55-gallon can of soda, for a buck in some of the stores. Yeah, socialism at work, Tony, you're right. So now if I allow that to continue, I can't complain. You know what I'm saying? So I told him, hey, I'm not too keen on this whole let's split the bill thing because now my meal has doubled in price for no reason whatsoever. And they all know that I trade, and they all know that in fact, I'll be teaching classes to young men about just money basics 101, that kind of thing. So I guess it's in the back of my mind. But some of the same principles apply to trading. If you have a drawdown, pay the price, fix what's wrong, cut your lot size, and then trade until you get your account back where it should be. Because by the time you get that back where it should be, you have fixed whatever got you in the mess in the first place. Now you can bump up your lot size a little bit. But the trick is to be consistent on something. Either be consistent on the number of dollars you're going to get or be consistent on the number of pips. But don't have it, well, today I made this and tomorrow I made that, because you'll never get a sense of rhythm. You know what I'm saying? You won't hit a groove with anything in particular. So I hope that explains why I cut the lot size down. And even though I cut the lot size down, yesterday we did hit off our 50 bucks. So cutting the lot size down doesn't change how many pips I want per day. I want that to be consistent. But if we're going to go with the 1% or whatever it was, we need to make 50 bucks a day. So I know that that may require an extra trade. Any thoughts on that, Tone? I'm sorry, Ron.
Mike. Oh, Ron.
No, Ron was yeah.
Yeah.
Does anyone else have any thoughts on what I just said? I'm not asking you to agree, but I just want you just to understand where I'm coming from.
All I know is, Lou, you're saying some of the same things now that I was hearing when I started over 20 years ago. So
Oh,
things
well,
haven't.
okay.
The,
All right.
the
Well,
first
that's good to know.
first thing I was taught was your first priority is preservation of your capital, and that's
Right.
exactly what you were just saying.
Yeah. Because, well, look at it like a shoe store. Um, your trading account is kind of similar to a shoe store or a bakery or whatever. Your product, the thing that's on the shelf, is what you're selling. It's what you're using to create your income. So in a shoe store, my product is shoes. In the currency market, my product is my money. If I run out of money, I can no longer trade. I have no more product. Do you follow me?
Yeah.
Or if you look at a restaurant, um, let's say one of these surf and turf restaurants or whatever, they have no idea how many people are going to come in and order steak tonight. They have absolutely no idea whatsoever. They have probabilities based on customer history and what day of the week it is, but there's no guarantee how many people come in. And yet somehow they have to make sure they have enough steak for everyone that asks for one. So they're going to end up in some cases buying far more than they need, and not that it will go to waste, but you get what I mean. They've overspent,
Yeah.
but they have to have that protection.
Yeah.
So the same thing here, I don't know how long my account is going to last, but I'm going to do everything I can to make it last as long as possible, even if it means cutting back on the lot size. And I just want to roll back up. There was a second part to your question. Capital protection drawdown. When pips traded, half lots are only worth half. Otherwise, well, otherwise, yeah. I won't say how many lots I trade in my live account, but I have a couple of live accounts, but it's definitely more than one lot because I like to split the trades off as time goes on. Um, and that's where I really learned how to protect the account. And I have re-up money in case I need it. And I've had people often ask me, how much money should I open an account with? And I say, look, I got $5,000. I'm going to open an account. And my advice to them always is, if you've got 5,000, open an account with 1,000. Because if you screw that 1,000 up, you can go back 4 more times and still re-up the account and keep going. What happens is many people have 5,000, and because they're not taught the correct way to go about learning trading and the correct way to manage money, you could take the same 20 trades that could kill $1,000 account, could kill a $5,000 account. Now you have no more money left to trade. I've done that too, twice. It will never happen again, ever, under any circumstances, because I'm a little smarter now. All right, let's just see if we've got another stab back down here. But what's the distance from here to here? 16 pips. It's a little risky because like this next push down may not get this low again. The other thing we did, and I'll draw it in. I'm not going to trade it, but I'm just going to draw it. We have a bottom, and a top. And what does that give you? That gives you the first part of a range. And remember, the range is 5 triangles. Or maybe you don't, but this would be triangle number 1 right here. And this would be triangle number 2 right here. And a possible triangle number 3 forming. This could bounce and this candle may dance and head back up, but we don't know. All right, so all of this is kind of cautionary. I don't need to rush. I need to wait for a decent setup. And this is how I used to get in trouble too, because I'd want to finish it now. I want to finish now. I want to get my money now. And that false sense of urgency caused me sometimes to take trades that really weren't in my best interest and weren't very well thought out. They were more emotional trades than they were common sense trades. And this would be our current trend line, would be here until the current candle closes. And let's go down to a 1. Because I've got this 2.5 pip spread, 2.5, 3 pip spread also. So if it's only 16 pips, figure I may not get a great entry. I may get an entry down here somewhere, and then now from here, it's only 7 pips. Take away the 3, maybe I'll get 4. You follow what I'm saying? Because right now, this appears to be that line that price doesn't want to cross.
There was a good entry earlier, wasn't there, on that 1 minute?
Several of them, yeah.
Yeah.
But we might have been in something at this point.
Yeah.
Oh, I need to get that crosshair tool. That's what I couldn't remember. Let me just write that down so I can get that later. The crosshair tool makes this kind of thing easy because I can drag the crosshair right on top of this 1 minute candle, and then I can see which 5 minute candle it was sitting in, or vice versa.
And that long red candle is a good candle because there's no wick on the top. So
Exactly. Well, we don't know that when we start, but we have the warning candle.
Yeah, yeah.
You see, we have the warning. Remember, this candle body is inside this wick. That's a warning.
Yeah.
That price is ready to turn.
Yeah.
So on the trend line break, now let's assume we had a trend line in here. All right.
Yeah.
Now I don't do this on the 1889, but experience has told me when I get that warning candle, I can enter right at the low of the warning candle instead of waiting for this candle to close.
Yeah.
You got me? But I'm not doing that. I'm doing pure 1889 and 1889 only.
Yeah.
All right. So we've got the a possible entry here, but I'm still not sold on the 5 minute chart. Okay. And
Hi, Lou.
hello.
You promised you would tell me more about the 18, is it 18? 90, or what's it? The method you're using? 1889, is it?
Oh, yes, this is Moneymaker. Oh, Nancy. Okay. I've got the four monitors and I have to look to see who's talking. Um, Very quickly, Nancy, first you would have to understand how I look at price action to understand the 1889, but
All right.
I'm going to explain the basic rules anyway. And then if you're here in subsequent days, I can add in little pieces to the 1889, okay?
Okay, thank you.
But the basics of it, oh, I could probably send you links to the 1889 videos now
I
that
was
I
going to
think
say you've
about it.
done several videos on it. Yeah,
Yeah, and I have a couple that are actually titled 1889.
yeah.
Uh, are they in that room?
I think they might be in the old one, Lou.
Okay, I'll have to double check for that. But basically, Nancy, what I'm looking at is this is an 89 moving average, this dotted line.
All
Uh,
right. Okay.
Okay,
Yeah.
and it's 89 exponential on close, and I made it a dash line just so it's not a regular line. And this one is the 18, and this is an 18 exponential, again on close, and I made it orange color, doesn't matter, obviously. I just want to come back and
Okay.
look at this. Yeah, my bias is shifting more toward long because it looks like it's harder and harder to get back down in this area, guys.
Yeah, Draghi's talking up the euro by the look of it now, so the down as usual.
Yeah. So what I like to see is for all these prices, and again, this is my long-term target for the day because that's the 50%. This purple line is 50% of this entire overnight move. And that's generally what happens after a significant strong move in one direction. Prices come back to what they call the mean, MEAN, which is the middle price. Okay, so there's nothing going on here, but you guys just keep an eye out if something does happen. Okay, so what I'm looking to do, Nancy, is I want to use the 18. Um, I use each moving average for different purposes. The 18 the 89 rather tells me what direction I want to trade.
Okay.
And when I'm looking to hold a trade for a long amount of time, I use the 18 as a guide for that. Now,
Okay.
I'm only here an hour and a half, and in that hour and a half, I'm trying to show completed trades from beginning to end. If
Mm.
we were here for 6 hours, then a lot of the trades I wouldn't bail out of because I'm nowhere near the 18. So the concept is I enter, let's say in here, this cluster, but I don't exit until price closes below the 18. So in this trade where I made like 5 or 10 pips or whatever it was, there's like 4.5 pips. That's because of the exercise we're doing now, and you may not know what that whole thing is. Maybe someone can explain to you later. But we're doing a specific exercise here for the last week or so. So if we were here long enough to watch the whole thing unfold, my entry is here, my exit would be there, and that would have been a 20 pip uh, move. You follow me?
Got you.
And then if my entrance was here, my exit would be up here, a close below the 18. That would have been a 35 pip move. And you can see in both cases, very, very small stops in relation to take profit. So in the exercise we're doing right now, the 18 doesn't come into play because I'm in and out as quickly as possible.
Okay.
Now, so that's where 1889 comes in. What I'm doing here technically is I'm looking for pullbacks, and I want price to pull back in the direction of the 18 because price tends to come to the 18 and bounce off. And here it came back toward the 18, didn't hit it, but it came back toward the 18 and then took off again. You follow me?
Yeah.
Red candles are always heading toward the 18, green candles are always heading away from the 18. So what I'm looking for are pullbacks. Now, how I define a pullback is, as you can see in this small group of, let me pick a better group. Uh, right here, you see we have a green candle, a green candle, a green candle, a green candle, a green candle. And you'll see that these wicks tend to get higher and higher. Now, there's a long wick up here at the top. I don't know if you can see it.
Yes.
Okay. What I'm looking for is that first red candle, because the first red candle means the market's going to exhale. It's going to take a break. It's going to rest for a minute. Okay. And then what I like to do is if that red candle has a lower wick than the green candle in front of it, I like to draw a trend line across it like that. And then I'm waiting for a break of that trend line, because once that trend line is broken, now I know I'm back in the direction of the 89. So price is pulled back toward the 18. It gave me a red candle. I go across the tops of the wicks of the red candle. Then on the trend line break, I take a trade back in the direction of the 89.
Gotcha.
Okay, so now I'll show you a few trades that were on this chart. And you see, I have a lower wick. I have two lower wicks. When the market is running in one direction, most of the time you'll get a high wick, and then the next candle makes a higher wick. The next candle makes a higher wick. The next candle makes a higher wick, and then all of a sudden, whoa, we didn't make a higher wick here. Something's about to happen. So when we make that first wick that's not higher, I put a trend line there, and then I wait for a break of that trend line. Okay?
Gotcha.
And now we have the higher high here, higher high, higher high. All of a sudden on this red candle right here, we have a lower high, and I draw a trend line here. Now there are a couple of other rules that I use to adjust this trend line, because on this trade, on this candle, didn't give us a break, but it made a lower high again. So
Yeah.
then what I do is I adjust the trend line to this lower high, from this one to that one. You follow me?
Yeah, gotcha.
And then this one, let's assume this one didn't break the trend line either. Well, then I adjust the trend line to go from this high to this lower high. And I keep adjusting the trend line like that until I get a break of the trend line. Okay, now this one didn't either, let's assume. Now this would be my new trend line, would be from here to here.
Okay.
So it's always the last two wicks.
Always the last 2 weeks.
Wicks, yes.
Yeah.
And then,
Okay. Always the last 2 weeks.
yeah, that's what and the 2 wicks have to be, in this case, low. In an up market, you want the wicks to be the most current wick needs to be lower than the prior wick. In an uptrend, you want the wick to be higher. Let me find a decent uptrend to show you here. This market's been in such a no, in a downtrend is what I meant. So here in this case, it's a downtrend. You see, you made a wick low, but now right here we didn't make a new wick low. This one's higher. So in this case, I put my trend line here. You see that?
Yeah.
The next candle did not give me a trade, and it did not break the trend line, so I adjust my trend line now to go from this red wick to that one. This candle didn't close below the trend line and didn't give me a trade. So now I adjust my wick from this one to that red one. Now I've broken the trend line, and that's my trade.
Got you. So the close of the red bar, you go in shorts.
Could you say that again? Yeah, could you say that again? There's a bit of an echo and a bit of an accent, and I'm unfortunately an ugly American.
The close of the red bar gives you an entry.
Correct. Now, what I do to make the entry a little bit faster and to use less of a stop, and for this experiment, I'm using pretty much a 10 pip stop, 10 pip take profit, but I'm getting out of the trade at 5 pips if it gets there, because we're doing a money management thing also. Okay, but usually my stop would be right at the top of this candle, right before the break. At the swing high, that would be my stop loss, and then my take profit would be the same. Okay.
Okay.
So that's the basics of it. But if you hang out enough, and I have many systems, we just happen to pick this one. I have many systems that work just as well, but you have to be disciplined and consistent to get the most out of it. Okay, so as I mentioned before, back here again, you see how this appears to be solid right now, and we're slowly creeping up, and it could be because of talking heads or news or whatever. So we'll have to see. but there's nothing here to really do at the moment anyway. And you see here, Nancy, I had my trend line in, and now I would adjust this trend line to these two candles like that. And this would normally be an entry. But because of the news and a few talking heads, different prime ministers running their mouth, I'm not sure what exactly is going to happen. And I prefer to trade with a little bit more assurity. Now, the other issue here, too, is that there's an area on the chart I call no man's land. And that's when prices are in between the 18 and the 89. And as you can see here, this cluster of candles is in between the 18 and the 89.
Yeah.
And I prefer to see prices below both or above both. Like right here for a long, you see if I put this trend line in right there, last two candles, one lower, the most current one lower than the last one. I'm above the 18, I'm above the 89. That's prime. When I get in here in no man's land, I'd rather wait a little bit and see how things unfold. Never, ever, ever be in a rush to pull a trigger. Especially if you've got like a set goal you're looking for or a certain thing you're trying to accomplish. Never, ever be in a rush. No one's standing there with a stopwatch timing you. Okay, it's about protecting capital. So the only thing I don't like about this is that we're in no man's land. And even on a situation like this, I would prefer that I'm below both on the 5-minute and below both on the 1-minute, because sometimes I come down to the 1-minute to take a trade also. Okay, and even on the 1-minute, this candle is dancing down here in no man's land also. And we could get a bounce right off this 89. All right, so, we'll watch it and see. But I don't see anything that's like, wow, I got to jump that trade. So you try to wait for the best possible setups. So that's where we are at the moment.
Thank you.
Okay, doke. And I can't find my watch. Oh,
9:23.
Yep, I see it. Could have been a nice trade. But you guys understand why I'm not jumping on any of these right now. There are too many questions. The other thing, Nancy, what we're trying to do is just show a way that you can get 5 pips a day, get out 5 pips a day, 5 pips a day, and just repeat that over and over. One of the room participants, Ron, we came to an agreement that we would try to do, I think it was 1% a day in cash, which would be $50 a day. So we're like $16 short of that at the moment. And if I go back to the 1-minute chart, it looks like we did get a bounce off that 89 on the 1-minute. Well, no, didn't quite tap it, but you get the idea. This is as far as I think that 1-minute chart was going to go. So I have another phrase, Nancy, called watching paint dry. And that's when the market really slows down and there's nothing exciting to look at except these candles. And that's where we are now, because I'm waiting for like a decent setup. And for me, a decent setup would be for a close below the 18 and then a pullback and then another shot down. Because the idea is to pick the highest probability trade you can, not to be in a rush. And we're only trading the pound dollar, Nancy, because over the last couple of weeks, I was looking at 8 or 9 pairs, and I was getting suggestions for pairs from guys in the room, and I would miss trade after trade after trade because I'm busy talking about the pound yen chart, and I come back to euro dollar. I missed a class 1 entry, and that happened over and over and over again. Then I took a couple of trades that were ill-advised. One was a rush. One trade I hit short and I meant to hit long, that kind of thing. So we had some drawdown, and I explained to everyone what I do when I have a couple of days in a row where I don't hit my number. Well, how do you fix that? So I went back and analyzed what I did and then changed my behavior. So it wasn't the system that caused the drawdown, it was how I was applying the system. So I changed that behavior, and now we're back on track getting winners every day for the last couple of days anyway. And that's where we are now.
Thank you.
Um, I would still, Ron, what do we have to do to get you a headset? Or are you at work? Let me ask that because you said you're unable to speak. Also, Nancy, while I'm waiting for Ron to type, what I do is I go out to the daily chart and I get a bias from the daily candle as to which way I want to trade. So yesterday we had these five black candles in a row. And I don't know if you've seen any of my other lessons, but usually if you get 3 to 5 candles of one color in one direction, there's generally going to be a turnaround. So yesterday we had these five black candles in a row, and my thought was I'm trading long today because after five in a row, usually the market will turn around and go long, and that's exactly what happened yesterday. And my thinking is, and this is a daily chart, is that prices should get right up in this area on this pullback. Now it didn't do it yet anyway, but that's my thought. Prices should get up in this area for a pullback, and if it gets up here and then turns around, then I know I've got maybe um, I'll say 200 pips of energy going south, and then I'll jump down there, and then I can really take a lot of short trades because I have a good bias on the market. But right now it's just a little bit in no man's land, so I'll wait a bit. Any thoughts, any
Thank you.
questions, anyone? No problem. That's not what I wanted to do. Okay, I want to see that. Um, and I'm trying not to jump around and look at other pairs. I know that some other pairs have probably got some great moves on it, but that's how we got in this mess in the first place. When I'm trading by myself, I can do it. I can look at several pairs because I'm not explaining anything or talking, and I usually have some music in the background just to kind of get me in the frame of mind. So now hopefully this will close below this 18 because like I said, what I need to see is a close below the 18. I need to see a close down here and then a pullback and then a trend line, and then I can take this back down here again. But until I see that, I'll hold off because prices tend to stick in no man's land for a while. Um, okay, Ron is saying, you have people around you, Ron. That's why you can't talk. Okay, I won't ask any more than that. I'll just let my twisted mind come up with all kinds of reasons as to who's around you. I'll fill that in myself and have some fun.
You're sick, dude.
Don't worry, Ron, your wife's not in the room under an assumed name.
Oh boy. I went through that. I remember when chat rooms got to be the big thing. I think AOL had like the biggest chat room in the world at one point, and they had different sub chats you could go into. And guys at work would talk about, hey, I was chatting with so and blah blah blah, and they give me the names of these different rooms to visit, and so a lot of times my wife would be asleep, and I'm up 3 in the morning typing away. This is before they had all the audio and stuff, so I can understand that you may not want the people around you to know what you're doing. So as I mentioned earlier, I wouldn't be too keen on a short trade in this area, no man's land, and you can see why. It bounced off the 18 and has continued to go long. but it's not at a grade A trade. A grade A trade would mean the 18 and the candles and the 18 are above the 89. To me, that's a primo trade. Then I would grab that long, okay? But I don't have that right now, so this is just watching paint dry. And once you make your trading checklist, you should really honor it, and honor your stops, as I mentioned yesterday. I think it was yesterday we had a trade came within like a pip of the stop, and I've learned over time that when you put your stop in, if it's well thought out, leave it. And sure enough, yesterday that came to fruition because price came right to that stop loss, didn't take me out, sat on it for a couple of minutes, but sure enough turned all the way around and gave us a nice profit, a much bigger profit than what I took. All right, so we're tapping that 89. And for me to get a prime trade, an A trade, I would need to see all of this happen above the 89. Now, what I would do in a case like this, Ron, is I may, if I wanted to be a bit adventurous, and I'm not doing it in this in our agreement here, I would take this entry right here, but I would take it with an even smaller lot size, and I would target the pivot or the 89. But I'm not doing that. I'm trying to, stick with what we're trying to accomplish here. So this is good. I like this. And there's our line from the 50% of the overnight move. And I'll put a solid line on it. And again, this is all just thinking the trade through. This isn't magic or anything.
Oh, Draghi must have said something good.
I hope so. Or maybe he stepped out to get some coffee or something. But you see, this was my target. This is where I felt price was going to go based on this whole thing here. So, I'm probably going to send Ron this headset I'm using. I bought 2 new pairs of headphones the other day. This headset, the sound quality is outstanding, but for some reason, the cups are square. And my ears are round, so you get this little biting pain after a while.
What? You have round ears?
Well, yeah, not quite, but they're not square. Hyperscalp coming. Daryl?
Pardon?
Hyperscalp coming. Wow, somebody said something. Hyperscalp right at that yellow line. So you see we hit our 50% level that we spoke about earlier.
Yeah.
And that's just how price normally behaves. And I mentioned to Daryl the hyperscalp that's that 50% level. This may close back below it, this candle. So now if I get a couple of candles and a little bit of a pullback, I'd be more inclined to take a long trade. Because as you can see from the daily, we've made the bottom wick here. We could be making the rest of this wick to get back into this pocket that I was talking about.
So the 50%, you're talking 50% retrace of the day?
Yes. Let me open that up. If I did a fib on this whole thing, because remember, 124 is more of a normal range for the pound dollar. I think the pound dollar 5-day range is somewhere between 125 and 150. If someone could just take a look, the 5-day range. So this is more of a normal range, and we've already hit that. And as I was mentioned earlier, if I put a fib on that whole, once we've hit the entire day's range, generally price wants to come back to the 50% level. And we marked this level out, a half hour ago, not knowing if it was going to do it, but I know from the probabilities that's what happens.
Mm-hmm.
And we just did it. We just closed above that 50% level. Now I don't know if it's going to hold. That will depend on this candle now. You follow me? If this candle comes back in and closes back below the 50, well, then that means this 50 level may hold, and we could be looking at another push down.
This might have something to do with stocks just opening too.
Yeah. Like I said, I don't need to know specifically what the news event may be, but it's good to know what time.
Sure.
And then, like later in the day, maybe one day we'll do London close also, which means we'll start maybe at 10 o'clock, instead of 8 o'clock. And then we'll trade from like 10 to noon. So we could do the London close because usually about 11:30. So, wow. Usually around 11 o'clock New York time, we get a nice move. That's because London's closing and people are settling accounts or setting up trades for the next day. Somebody just fired up a broker.
Yeah, I just checking the range. It's 5-day range is 118.
Okay, that's close enough, but you get my thinking. That 124 is right in that normal range. The 187 was a bit of an aberration because of yesterday's news. And you go back over the chart day after day after day, you'll see that price will fill in that 50% gap.
It's like this is more of a product of dollar weakness compared to pound strength.
Could be. But again, if you remember how I determine a level, you see a lot of guys might have went long right here, thinking that, oh, we broke the level, let's go long. Oh, no, let's wait for this next guy to see what happens. You're never, ever in a hurry. I want to see what this guy does. If this guy closes down here and then gives us a little bit of a twin tower, now the twin tower is not part of what we're doing, but I'm just looking at overall price action. Then this thing may want to head back down, toward the pivot again or down toward the 89 again. But right now, if this candle were to close where it is, I'd have to say that 50% level is probably holding. Oh boy, I got to get home earlier. My days drag me into like 2 o'clock in the morning. And here we go. That's what I mentioned. Remember I mentioned the hyperscalp, Daryl? You there, Daryl? He's probably busy. Daryl took a couple of these hyperscalps where you've got that significant line on the chart, price tags it, and then pulls away from it.
Yeah.
So in this case, had he took a short right here, he'd only be up about 6 pips or so now, but you get the idea. You only want to grab 2 or 3 on a hyperscalp like that.
Yeah, I was just muted for a second because I was making noise.
Sure. I was talking about the hyperscalp here, because you've taken a couple before. And that hyperscalp of that 50 would have been a decent one for a few pips. So now we're waiting to see. We're above the 18. We're above the 89 rather. Let's go down on the 1 minute and see what's going on there. And the 1 minute's got a nice long setup here because it's above the 18, above the 89. We've got a decent little drawback here. Let's just draw that in for the moment. We had a couple of decent long entries here, but again, what this cluster wasn't matching the 5 minute chart. See, the 5 minute is in no man's land, but the 1 minute is well above. I prefer to see them both line up. That's when you get the highest probability trade. So all of this is kind of the normal risk, nobody knows what's going to happen kind of thing.
Well, in the last 10 days, both the euro and the pound have had almost identical ranges.
That's
yesterday
interesting.
On the euro dollar, the range was massive, 278.
Yeah, that added to it for sure.
It's only 6 pips to the bottom. More likely it'll stop out right in here somewhere. See these two highs here? So I'm thinking if this does come down, it'll probably stop right in that area and turn back up. But I still want the 5 minute to be in line.
Well, it could just been some sort of profit-taking thing at open of the stocks or something. That might just.
Well, it's new money coming in now, analyzing the prior data, and they're kind of jockeying for position. Okay, that's the 5 minute trend line there. But this is good. We've got a close above the what do you call it? This would be a little bit of a risky long because we're at that 50. It may just come up and tag that 50. And I want to see where the 1 minute is. Yeah, I'm thinking the 1 minute's going to bail out right here. It'll probably come down to this area here and then turn around. This lone soldier.
I guess the euro's making the move on some increased optimism.
Yeah, Draghi's saying something good, obviously.
We tagged the 18 down here. Let's go back to the 5 minute. Nothing new there. And this is the same pink line from the 1 minute chart, by the way. This lone soldier here, same line.
Yeah, Darryl, you need to get ready to short the euro in 2017 when Britain has its in-out referendum.
Oh, really? If you mean it, if all the fiat currencies are still around.
Oh well, yeah. The euro may not last till 2017. Who knows?
I guess if we all hitched on to every doomsday wagon that came through town, we'd be someplace else, huh?
Yeah, all that doomsday stuff, it's really just to sell product. Yeah, they're just looking to sell product. All the emails I get from these, the shift report, the this report, the that report, and every damn one of them's been wrong.
Yeah.
Every one. And they all, pushed that. You see how we got down to this pink line here? And look at what happened.
Perfect.
Yeah.
Yeah, Lou, can you give us this week's lottery numbers before you go?
I'm working on it, man. I'm telling you. I'm working on it hard. And when I get them, I'll share them to you. I'll share them with you.
You get everything else right, so...
I just paid $99 for a system that promises that it'll pay off there.
Okay, I'm going to take a shot here at this long. Okay, and I hit the buy button this time. I usually take a thank you, ladies and gentlemen. I'm here all week. All right. So I'm going to take a shot at the long here on this 1 minute setup. We're above the 18, above the 89, and if I go back to the 5 minute, prices are above the 89. Let's go to the data thing, and let's keep an eye on this. and see if this will cooperate or not. And oh, I didn't put stops and take profits in. Let me go back to my 1 minute. Okay, so my stop is, what is that, 4 pips? Let me see. This looks like right at the pivot is what? 13, which would be 10 plus my spread. Okay, let me come up just a hair above the pivot so I could see it. Okay. And I'm going to set this take profit out here. Let's go up to these highs. Oh, and how much is that? Let me close this. I didn't see how many pips that was. Yeah, about 10. So I'll go right up to this flat top here, all these flat tops. All right. And we'll watch some more paint dry. And what do we need here? Like 12, 15 bucks to get our number?
I think you said 12, didn't you?
Well, we had what, 36? Let me go to account history. 34. So to make 50 bucks, we need $16.
Yeah.
Done. All right. So we got our number for the day in pips. We got our 50 bucks a day. Okay.
Yeah.
And we're closing back in on 5 grand.
59. Yeah, very good.
Okay. So you see how by waiting for everything to line up and not being in a rush, you let things come to you. Ron, you happy? We got our 5 pips and we got our 50 bucks. So everybody should be happy today.
They should.
All right. And since we fixed what the issue was not paying attention, we're 1, 2, 3, 4, 5, 6 trades in a row. 6 winners in a row, which is, okay. You can go as many as 50 in a row, by the way. But that's when you really test your patience. You know what I'm saying? That's when your patience comes in. And we did it before 10 o'clock, which is even better.
Yeah.
So we're all complete now. Nice, all rolled up in a nice bow. Oh, you see how fast that jumped up? It staggered here, and all of a sudden, in less than like 5 seconds, it jumped from like 2 pips negative to whatever it was that gave us the 25 bucks. That's why I keep my take profit a little higher than the number I actually want, because if there's a sudden rush or a sudden push and it rushes up there and hits me, I ain't mad. You know what I mean? But I do know what my number is. I do know what my target is. Yeah, you know what I'm going to do? I'm going to let you trade one day, Ron. You watched me enough now to get an idea. I'm not saying copy my thinking, but apply some of your own magic and, and apply some of the basics.
So, Lou,
Yes.
we're on the 1 minute here, but okay, well that's fine. It doesn't matter which time frame, but I mean, on 1 minute here, we're looking at there was a big move up, 1, 2, 3, 4, 5, 6 candles up, and
Here.
then price just kind of like meandered back on down,
Mm-hmm.
and then there was a bit of a rush up there on that trade that you entered. So do you read that as any particular type of flow into the market?
I don't know what caused the rush, and there's no way I can know.
Right.
What'll happen, it'll rush up, and then there'll be some news blurb 5 minutes from now that'll say India, buys 6,000, the Indian bank decides to buy 5 million euro. And then it'll be, oh, that's what happened. But there's no way I can know on an instantaneous basis if and when that sudden surge is going to come or what it means. And it looks like a lot on a 1 minute chart. On a 5 minute, it probably was just a candle wick.
Yeah, it's not that bad on the 5 minute.
Right. So you get what I mean? On a 5 minute, it wouldn't show up at all, really. So everything that we targeted happened today. The 50% retracement back to the middle of the chart. That's this yellow line. You see that?
Right.
The what do you call it? The hyper scalp at the 50%, and the hyper scalp overall would have produced a 12 pip move. So you would have certainly picked up 3, 5, 8 pips in the process. It appears that this 50% level may hold because, as I said before, just because this candle closed above is not a guarantee that it's going to go long. I want to see the next candle. And as I mentioned earlier, the next candle closed and gave us a twin tower. You follow me? Which usually means that the following candle is going to be short also. All right? And I took my long trade because price was above the 89 on the 5-minute, and on the 1-minute it was above the 89 and the 18 at the time I took the trade. So that would be like a B plus trade. What would have made that an A trade would be if on the 5-minute the 18 was above the 89 also. But again, our goal was to make our $50 and to get 5 pips. So either way you want to look at it, whichever way, means something to you, it's doable. Okay? So it's definitely doable. And any thoughts or questions Ron is saying we should do this a couple more days. I do want to do this for a couple more days, but there's so much other stuff I want to get to. I've had 100 requests for Renko bars and some of the other special indicators, and I do want to get into some of that stuff also. But we could try to do this every day. Excuse me?
I mean, just interpreting price action on its own without any indicators.
Oh, I do a lot of that. The guys in the room will tell you that that's the heart of what I teach. But I also use other indicators in some of my other systems. But I believe you have to have a real solid foundation in price action to be able to effectively use any indicator. So, yeah, I do a lot of stuff that's just pure price action. And that's why, like, this is a formation that I call a twin tower, which is one, I have a bunch of them. This is a price trap up here. That's another formation. This is a failed breakout. This is also a twin tower here, by the way, which I won't get into. But these are all things you can trade without a single indicator on the chart. And I mentioned here I wanted to go long because I had the double bottom. Nancy, you were going to say something?
Yeah, I want to be able to trade without indicators, basically.
Okay. Well, the indicators will help you, but it's good to understand price action so you can do a lot of this without anything else. So I understand that. Okay. Any questions, thoughts?
What does your setup look like as an individual? What does your screen look like? How many charts do you have at any given time?
Nancy, if you look at last Tuesday and Wednesday's videos, there's two completely different systems there where indicators are used.
What dates are those?
Oh, could someone post the link for her?
Sure.
Yeah, Ron, don't get wrapped up about that being down 3% because trading is long term. You got me? Trading is long term. If you panic over, something that insignificant in the overall scheme of things, you really make it mentally more difficult for you to trade because you're always locking in on the wrong number. The number you should lock in on is what can I do repeatedly? What can I do day in, day out, day in, day out? What part of that can I really lock in and get under my belt? Then from there, you can either build your lot size or build your profit target. You follow me? Okay. That's important because you're just really locked in on that 3%. Oh, but we're still 2%, 3%, and I get that. To you, that's extremely important. And what I'm trying to show you is, well, how do you get back to where you need to be without doubling up and martingaling and taking risky trades and breaking your own rules? And that's the stuff that people do over and over and over again. Nancy, you could start there. I have got maybe 75 other videos on YouTube, but they're in different rooms. So I'm trying to consolidate them and keep them all in one spot. The dates.
Education, yeah.
Well, no, yeah, I don't know if no, I think the dates on the recordings are the actual dates that they were recorded.
Yes.
It may take me a day to render them, Nancy, but the date on the video is the date it was actually recorded. And you'll see we had, up days and down days. That's real life trading. But I'm, showing the whole process as much as I can with only one method and with only one pair. I am doing other things in the background in my personal accounts, but that has nothing to do with what we're doing in this room. And I have a lot of setups, Nancy. That's the other thing. Don't worry about that. I'm sure I can find a system for anybody in the world once I talk to them a little bit and get to understand how their brain works. All right, so just to go back to this chart, it looks like this level held because we closed below it right here, that red candle, and every attempt to crack that has failed so far. So for right now, this level held. This is what I mean by one of those false breakouts. That's why I want to see the next candle. All right, so it's 2 minutes to 10. I had the recording on. Merit badge for me, extra scoop of ice cream tonight. And I will. Oh, is Nancy in the chat room, in the Skype room also?
I think so.
Oh, Rob just posted the links in the. Okay, I'm gonna copy and paste these in here, Nancy, for you. Copy, selection, and paste.
She's undercover in the Skype rooms, TQ13.
Oh, she's TQ13 in the Skype? I have no
Yeah.
idea who the hell that. Okay. All right. So, yeah, Rob just posted this in the Skype room and said that the 1889 is there and some price action and candle reading videos. That's another room. I ended up making too many rooms because I didn't know what I was doing, actually. So when I fucked it up, I just made a new room. It's good to know what you're good at and what you're dumb at because you can get a lot of humor out of it. Okay, if there aren't any other questions, I'm going to say so long. We accomplished what we set out to do today, and on both ends, and same thing yesterday on both ends. So we'll. Oh, and here's Rob's posting another link with quite a few other videos. This is a different one. They're not titled, so I can't tell you, what's in them, but we'll get it all sorted out. But take your time. The older videos are like 2.5, 3 hours long because I really did a long day. Okay. But the newer videos are about an hour and a half, and I realized that I talked so much it made my throat hurt after a while. But this is better. And we had a long setup here, but like we're done for the day. But this was a legitimate long setup here on the 5-minute. We don't need this 50% level. Let's get this out of here. Let's see what this entry looked like on a 1 minute. I come down here. That's a guesstimate of it. And delete that trend line. Come down to a 1 minute. Let's see what we have. Oh God. Mm.
Sweet.
I know. I know. That open right there was our entry. Right there. And where's 10 pips? It's like down here by the pivot. Perfect place to put a stop. And that went 17 pips.
Wow.
Okay. But we're done for the day for the most part.
Yep.
So, all right, gents, I will say so long, and we will do this again tomorrow.
Very good. Thanks.
Okay.
Thank you.
Yep. Be well, everybody.
Bye.
Um, let's see, how do I close this one?